Yeah, so good morning, everybody. We have a couple of experts here talking about DeFi today. We have Fabian Schär from the University of Basel. We have Magnus from Ernst Young in the Nordics. I think you need to explain us where exactly you are sitting right now. Then we have Barathy from, I think from Zurich, right? He's also not at a large scale company, but rather at a startup working also in the DeFi area. And finally, of course, we have Jacek from the MakerDAO Foundation. And I think we will have a nice discussion about what's going on in the DeFi area, whether DeFi is already ready to become the future of the capital market, or where the risks are, whether the system is nicely designed enough, or when this will be. Therefore, we will have a quite interesting discussion. Maybe let's quickly hand over to the presentation of everybody, and everybody quickly presents himself, also his perspective and his viewpoint, such that the audience can clearly also get a feeling about why are you saying this, given your background you have. Who wants to start? Maybe Fabian or Magnus. Present yourself. Magnus, you want to quickly?
Yeah, sure. I'll talk Fabian's it. Okay. Hi, I'm Magnus Jones. I'm the Nordic blockchain lead at EY. I'm also the Nordic innovation lead at EY. At EY, we have a great focus on blockchain and DeFi in general. Globally, we have 14 core blockchain hubs where we have more than 300 blockchain developers. We have also more than 1,000 consultants with an in-depth knowledge, among others, in Oslo, where we have 25 persons who works on this area on a daily basis. So we do everything from technical implementations to assisting startups to public listed companies to work with authorities, tax authorities, regulators, finance authorities, banks, central banks, all of the landscape actually from A to Z within this landscape.
Excellent. Who wants to be next? Fabian, would you like to present yourself?
Yeah, sounds good. Hi, everyone. I'm Fabian. I'm a professor for blockchain at the University of Basel, and I'm heading the Center for Innovative Finance there. I co-authored the book Bitcoin, Blockchain, and Crypto Assets. I got a PhD in cryptocurrencies and blockchain technology. Started researching the topic back in 2014, mainly about stablecoins, CBDC, mining efficiency, and one of my current research focus is decentralized finance. I'm mainly interested in public chains, so Bitcoin and Ethereum, and I'm also a board member of the Swiss Blockchain Federation and advise several companies on this topic.
Excellent. Yeah, maybe Ernst, would you like to continue presenting yourself quickly?
Sure. So I'm Barathy, and I'm the CEO and founder of Future Wealth and Technologies Gambia out of Crypto Valley in Switzerland. I recently wrote a book called Savvy Blockchain Investor, which kind of sheds the light into why you should invest in blockchain, why DeFi is so interesting for all of us to get the innovative financial products. And I also have another hat, which I help actually the banks implementing blockchain and AI technologies. So I do see both the perspectives. One side, how the traditional players react to the DeFi, and how the new players are actually disrupting the markets. So I would share both the views. Thank you.
Okay, great stuff. And finally, we have Jacek, which I have to unmute. Please also present yourself.
Sure, thanks, Philipp. So my name is Jacek Czarnecki, and I've been in the blockchain space since graduating from law school 6 years ago. And my first task, professional task after graduation, was to contribute to a report on virtual currencies. So this is when I went into this rabbit hole and never really looked back. And over these 6 years, I advised some major projects, went to Oxford for graduate study. And for 2.5 years now, I've been a global legal counsel at the Maker Foundation, who are creators of the Maker protocol and DAI, the stablecoin, one of the pillars of the DeFi space at the moment. And I'm at Maker, I'm basically responsible for this global regulatory, legal, and policy issues. I've been always interested in things at the intersect of law, technology, and finance, and this is why, you know, like blockchain and DeFi is an excellent place for me. Also, I'm wearing a few hats in various initiatives in the space, like a board membership in MAMA out of Zurich or ThinkBlock Tank out of Luxembourg. Also, I'm a co-chair of Working Group Finance at the NADBA in Brussels, like a leading industry body in Europe. And I'm, you know, very much interested in seeing, especially finance and in particular financial regulation facing this, you know, new reality created by DeFi, but also creating this reality. Yeah, it's and Philipp, last word. Really great to be here, and thanks for creating this initiative in these hard times.
It's not that easy, you know. I'm sitting here having a coffee, so that's fine. No travel needed, and not a conference. I think that's it's bad, pretty much the entire situation. But it's good to have digital techniques out there, such that we can do it. And I'm happy that you have joined to talk about DeFi. But let's now really jump into the topic. So, what's the current status of DeFi and or DeFi, as depending on how you pronounce it, and how did DeFi came through the crash which we experienced approximately 3-4 weeks ago? So who would like to start here explaining us the status of DeFi? Maybe you, Jacek? I think you have the best insights here.
Yes, that's true. So I mean, you know, like I would say that, you know, DeFi is definitely a niche, right? When you look at various metrics, this is like a drop in the ocean of traditional finance, right? But there is something in there that, you know, keeps all of us, including, you know, all the other distinguished panelists here, in this particular space. So even though, you know, the space is relatively small as compared to any other, like, you know, segments of financial industry, I think that DeFi really, you know, first, it really has a very strong potential, and, you know, over time, on various fronts, it has proven to unfold this potential in various ways. There is still a lot to do, and this is something that I want to underline mostly on this panel, that, you know, all of us are needed in order to fully, you know, tap this opportunity of DeFi from all the perspectives: technical, economic, business, legal. But I think that we are on a good track in a way that, you know, DeFi still exists, right? This is such a nascent phenomenon, and it went through a few crises already, including the one a few weeks back. But, you know, we are still there, right? And we see huge potential, and there are a lot of people on this conversation because we all see this potential and want to unfold it.
Okay, who would like to add something? Maybe you, Fabian. I think you also should have quite deep insights about what happened in the last couple of weeks. Whether there was a meltdown in DeFi or not, that's also an interesting question.
Yeah, I think a few months back, everyone was really excited when we hit the $1 billion locked in DeFi mark, and everything was just fine, and it was super exciting times. And then we came with a reality check a little bit when these scandals happened, like the Fulcrum case with the flash loans. And I think, honestly, DeFi is currently leaving the infant stage. I mean, it is still highly experimental, of course, and we've seen some issues, we've seen some security holes, we've seen some dependencies, but people start taking it more and more seriously, and I think it will leave even stronger from these scandals than it went into. So I'm really excited. I think it's an exciting technology. I think it's a highly transparent technology if used correctly, but it's still highly experimental.
Okay, perfect. Maybe same question to you, Magnus. What's your opinion about how the state of DeFi is, and also how it went through the crisis?
Yeah, well, I agree with the two others. We are at a very early start. It's like, if you look into the DeFi market in general, there's 50, 60 actors there. Estimately, there's yeah, we've seen various numbers, but around 50,000 people participating in DeFi. So it's really small. At the moment, about $700 million locked up there. So yeah, it's a drop in the ocean, but still, it's rather about the dynamics here and the functionalities and how you build something. So we see more and more both targets and clients going into this landscape, because the fact that if you look into the GDP of development country, there's approximately 20-25% of the economy relates to financial services. So hence, there's a huge potential for this area, definitely.
Okay, and Rams, what's your take on the current status of DeFi? Where are we right now?
It's a very early stage because I run a startup. So, like I look at how the DeFi companies are actually doing their copy of their websites. And if you look at the websites, you do know that actually they are actually catering only to the crypto community. So, like its own community, own sales. So it's about really partnerships within the community. And that's the pitch you see in every single website of all the DeFi. And so some people use decentralized finance, some use open finance. But if you look from outside world, they don't really make much sense because you need to really make a pitch which actually touches the base of the investor. So, but there is a very good reason actually, because any startup, the best business model is actually to start to sell within the community, to form the partnerships within the community. And that's exactly all the DeFi companies are doing. And a beautiful growth hacking what they are going through. And there are so many technical issues they need to cross. And so given it's an open source community, we'll see a lot of breakthroughs coming. But at this stage, it's pretty early stage. It's really a startup across the whole DeFi. And we haven't seen any big unicorns other than DAI or Maker.
Okay, interesting. So I think that was a very good starting point. Maybe we try to ask the entire audience, let's see if this works, with one of these Mentimeters about what the audience is exactly thinking about potential risks. Some of them have already explained. The question now is, give me 1 second to get this technology right. So the question is, can you see this screen now, which is showing like this blue-pink picture? It comes up now. Maybe you go quickly to menti.com and enter this code, and let's see what exactly is the audience finding as risks for or risks within the DeFi ecosystem. We already have one question upcoming from the chat. I will answer this in a second. And let's see what the audience is saying. This should actually work very well. We exercised it already. Can you see the screen up here with these bubbles? I think it works. So what are risks in the DeFi area? So we see here that mass adoption could be a risk. We see deregulation could be a risk, as well as regulation, privacy, acceptance, counterparty risks, bugs, liquidity. I think that's an interesting point here with security, privacy, and regulation being the most important risks for DeFi or within the ecosystem. Who would like to comment on this?
Well, I don't see oracles, which is quite surprising.
Oracle? Point, yeah.
Yeah.
Yeah. Why do you think oracles are a big risk?
Well, pretty much with all the scandals we've seen so far, the source was the oracles, right? And that's always the thing. You can make a smart contract really secure if it only relies on the on-chain data and is programmed in a secure way. But as soon as you're relying on off-chain data, as soon as you need an external data source, there are some dependencies. And I think that's currently the biggest issue in DeFi. How do you solve these external data fees while still being decentralized?
Okay.
Yeah, I think I agree. I mean, this is definitely like a very important point, and much effort is being put into solving this, puzzle. At the same time, this is, not purely, but mostly a problem of a technological nature, right? So those kind of problems are really, like, my usual approach is to really count that technology is gonna provide a solution, right? Because this is similar to how like Bitcoin solved a few important problems, not in a way that it was like a scientific breakthrough, but just provided a certain technological framework for solving a few important problems. And to be honest, I expect that the same is going to happen with oracles at some time, right? Sooner or later. But the other problem that was, so apparent here in this poll, regulation. This is that would be my vote, as well. But I'm looking at that from a different perspective, because this is. I would say this is like a risk for some DeFi projects, that's for sure, especially those that are fake DeFi projects, because there are a few like that in there. I would say that this is a challenge. This is also the opportunity, because the gateway into the mainstream, and this is, I think, that many people in the DeFi space are dreaming about entering mainstream with their products, which are secure, transparent, decentralized. If you want to enter the mainstream, you have to play along, the rules that are in the mainstream, and these are legal rules at the moment, especially in the financial sector that is so regulated. So regulation is obviously a challenge, but it's also an opportunity. Once, on one hand, DeFi solves this challenge, and on the other hand, regulation and policy becomes more open, this is going to create a bridge that will really provide, a huge scalability potential. I mean, like business and social scalability potential for DeFi.
Okay, Fabian, would you agree that growth of the DeFi ecosystem can only be achieved once you're complying with the regulatory rules? And by the way, which regulatory rules? Because we have like tons of countries and everybody finds that it works or should work differently.
Yeah. Well, it depends on who you're going for, right? I mean, if you're going for institutional clients, for example, where you really have the big money, then of course you need to be compliant with everything. When you're going for people who don't necessarily have access to the current financial system, who don't necessarily have a bank account as of right now, who cannot trade any of these financial instruments we are currently seeing developed in the DeFi space, then I think you don't need to be 100% compliant with all the regulations. In the long run, though, I completely agree with Jacek. I think if you really want to go mainstream, then you have to be compliant to some extent.
Okay, Magnus, maybe that's a question for you. Who is actually using DeFi so far? You said that it's 700 million, if I remember it correctly. So who is like providing this amount of money to the system? Is it retail investor? Is it like first institutional investors coming in? Is it like the whales from the Bitcoin area now switching to another additional ecosystem? Who is using DeFi?
Yeah, can I just add to the regulatory part on the last question, just to follow up first? I have to answer that question as well. That I think it's an important element here too, that we in the industry also need to understand that, well, blockchain in general is hard to get for the average person, and hence DeFi is even more difficult for the average person to get. So hence, when you look at it from a government point of view, from a tax authorities point of view, from a controlling point of view, they don't at the moment have the knowledge there to actually control this at any level. If you look into the crypto market in general, from an authorities point of view, they started to carry out controls only 2016, 2017 as a larger scale. So hence, it will take some years before they actually understand this. So I think it's an important element here that we as the industry also has an obligation to then try to educate people here, and that's the most important thing we can do to educate governments. We can't just sit still and say that we need regulations. It's so many people that just say we need regulations, but I have very few that actually comes up with a core recommendation for a regulation. So that's an important element that we will see. That I predict that for the next couple of years, we will not see any controls from the authorities because they don't have the knowledge there. And it's not that I blame them for it, because it's very hard to get this landscape. So we have to take that into considerations when we look into this, that I think in a couple of years, we will see this market grow significantly. Then the authorities will look into this in the same way as they did with the ordinary crypto market when that rised into the sky. Then suddenly the numbers weren't insignificant anymore, and then it's more attractive for the governments to look into revenue losses and how to collect the taxes rightly here.
Okay.
There's lots of unanswered questions from the regulatory side where we are at the moment, for sure.
Okay.
But back to your question towards who uses this. we at EY, we have several clients who works within this area. I can mention a couple of them. We have a Norwegian company called Viv, who has a trading platform for unique assets, where they use a smart contract to track down ownership, provenance, transaction history, etc. And as a start, they have looked into the fine wine industry, where the wine itself is bonded located in a bonded warehouse, and the wine bottles are tokenized, so investors can trade, sell, and even seek financing towards their tokenized assets. So they can do this for then a fraction of the previous costs in the ordinary world here. So they have a platform which covers everything from tokenized lending, margin trading, synthetic assets, and a trading marketplace where you can actually buy your wine now using a non-fungible token exchange called OpenSea, and actually pay for your wine with DAI. And they are also having other luxury goods, etc. onto this platform. So that's one area where we see it. Another area is that we have a client of us called Myrist, which is a real estate industry company, who has created a platform within this, not necessarily core on the DeFi area, but I take it into the same category because mostly DeFi projects are not totally decentralized. It's a centralized parts of most projects. So that's also a very interesting place where they have, among others, going to build the world's first energy positive hotel. And they're going to store the exceeding energy and sell that off grid by using their own tokens. So
that's interesting. That's interesting that we see real businesses from the, let's call it, off-chain world adopting all this. So who would like to add on this question? Maybe Jacek. We just have heard that DeFi might grow in the next couple of years, but it will take a little more time. Where do you think that the next growth is coming from? Is it off-chain businesses now entering? Is it institutional investors? Is it more retail investors? So where is growth potentially coming from, and when would you expect more growth to come to the ecosystem?
Yeah, definitely at the moment, like I think that DeFi is like a right solution for some institutional users and some retail users, certainly not for everyone. This is not without the reason why DeFi is still connected to its original source or roots of crypto, right? I mean, the crypto users are probably the best possible user base for now, and this is like a very limited user base. This is why DeFi is probably in so nascent stage. I'd say that irrespective where the growth will come from, I'm not sure if I can provide some unique perspective here, but what can I say is that I'm more interested into where DeFi will go. Not necessarily who exactly will come to DeFi, but where DeFi will go, because this is still open. And I truly believe and hope that DeFi will, follow the original path of creating, solutions that are fully decentralized, fully permissionless. At the moment, we see some, inconsistencies between this approach and, for example, traditional institutional approach of traditional finance. But I'm sure that over time, this is going to be overcome, because what we are really truly talking about when we're speaking about the potential DeFi is that we are talking about permissionless decentralized protocols that are at the same time super secure and transparent, that provide those new infrastructure layer for the financial industry. And this layer is going to provide a basis for various categories of users. I'm not sure where's gonna the first wave come from, what's exact part of users, but I'm sure that if DeFi movement follows this original path and sticks to certain values that were at the core of this movement, then this growth is gonna happen sooner or later, because this is just a unique value proposition that just needs to win. That's at least my perspective.
Okay, who wants to add something maybe on the question in which areas might DeFi especially grow? Maybe Rams, what's your opinion about the areas of growth or fields where we can expect more adoption or more business models coming?
Yeah, definitely on the lending business and borrowing business, it's a great value proposition. But where I see really the value of DeFi is, for example, if you take 2019, right? So everybody spoke about security token offering, STOs, because everybody said ICOs are scams, and like we need to have a regulated offering, which is the security token offering. But then we are now in the beginning of 2020, and actually we don't talk about STOs. So that was a hype, and then definitely it'll come back, right? So maybe like a year or two. But what really happened is DeFi picked up that business case and then started building on it. And today, if you see Synthetics, for example, then you see that actually they are exactly doing that, but in a very DeFi way. So that's one nice example of how DeFi solves many issues that exist in the market in a very decentralized fashion. And that's one thing you need to note of, right? So in that sense, what I see right now, borrowing, lending is one of the standard use cases, trading, yes. But I think very interesting business models are coming up, right? So how do you do group payments? So whatever we think in the traditional world can be actually built in DeFi. And the STO is a very good example of, like something was told and DeFi did it. And that's the way I see actually DeFi solving a lot of problems in the coming years, what we can't actually do today in the traditional finance.
Will we see more applications, as Magnus mentioned them, where you see off-chain entities, off-chain assets being financed, for example, through DeFi instruments? And by the way, how do you solve the gateway problem? Because then again, you need a trusted regulatory environment to combine off-chain and on-chain. Do you see that there are more examples coming up as Magnus mentioned, for example, financing, I don't know, assets such as wine and other things?
Definitely some of the traditional assets will come into the DeFi market, but then you need to do it in a very different fashion. So it cannot be through the standard oracles and the standard gateways. You actually need to model it very native. So, like if you look at the offerings today in DeFi around the assets, they are actually native offerings. So once you do something native, you actually solve the security issues because you don't need to go through the oracles, but you have actually a representation. And that's one way to do it. So I think many companies will adopt such native models for asset modeling. And, but I do believe actually the biggest issue is still the security. So, like if you look from yourself, right, the first thing is you have the fear. And that's something you need to overcome. And the second thing is regulatory. Like regulatory is something people do, like in the second stage, right? So if you look at every person, the first thing you want him to come forward if you can solve the security issue. So I think it's a chain where like we have the crypto community participating in the DeFi. And once we have some very good security solutions in place, and around that some insurance, because insurance is a way to remove the fear, then we'll see the next wave. And then the third wave would be the regulatory. So I'm more bound for solving the security issue at this stage, building the confidence for the people. And that's where actually we will have the next set of big adoption.
Okay, Fabian, what's your opinion? Do you ask the Oracle question previously? How to connect off-chain assets with DeFi, because you will always have an Oracle. You also have to have a very strong regulatory environment such that basically the connection is safe, right?
I mean, native assets only work when you have something that is created natively on chain, right? As soon as you introduce something like your wine example, where somebody promised to deliver a bottle of wine for a token, this is not going to happen natively. You always have a counterparty risk, and you need to solve that counterparty risk to some extent. So I'm somewhat skeptic in that way, to be honest. I think that's not really a DeFi use case when you start to tokenize off-chain assets. To come back to your original question, the one you asked earlier about institutional clients and retail investors, I don't believe that the institutional clients are currently using DeFi. First of all, it's not targeted at them. Second, we already heard the number with $700 million US. I mean, I don't want to bash DeFi. I'm actually a big fan, but 700 million in the context of the broader financial system is absolutely nothing. Then I just checked before this call, when you look at the multi-collateral DAI, the most prominent stablecoin, the one from the Maker Foundation where Jacek is from, has currently around 50,000 addresses which hold DAI. 50,000, it's not that well distributed, right? I mean, it's not that many people who actually hold it, especially once you consider that there are people like me who have dozens of addresses, then you don't necessarily know how many holders there actually are. And the lending markets, I also think that's really interesting, but the most prominent protocol currently has around 6,000 people who are lending and borrowing assets on there. So also, I mean, what I'm trying to say, I guess, is it's still really niche. It's really exciting. It's definitely for retail clients so far, and we don't really know where this is going. One further remark on regulation. There's, by the way, an interesting question in the chat. They ask if we should actually go for centralized regulation when we have something decentralized. Not sure about that. If implemented correctly, if DeFi is really implemented in a decentralized way, as its name suggests, then there might not be the need for certain regulation. For example, when you don't have an escrow agent, when you don't have a custodial service, many of the regulation in the traditional financial system might be obsolete. The thing is, or the high risk is, that many of these decentralized protocols are not in fact decentralized. We see something similar as with blockchain, where everybody just assumes that something is decentralized because it has blockchain in the name, with DeFi, where everyone just assumes as soon as a company starts calling itself DeFi, it is secure and it is non-custodial, and that's simply not true. I think it will be really important to differentiate between the various protocols and to look under the hood and what is going on the protocol level.
Good point. But maybe Jacek, you want to add something?
Yeah, I think that I fully agree with Fabian on many fronts. That was really cool. I think that like regulation, I think that there is a certain. I'm not in this WhatsApp. I didn't manage to you know.
I'll show the link again real quick.
Take the picture on time.
The question was.
I'm going to do that. But this point about centralized regulation and decentralized reality or decentralized finance, this is really good. But there is certain misunderstanding. I mean, you cannot get rid of like certain like counterparties in finance. This is normal. I mean, when someone owes you something, and when is issuing debt, this is obvious that this is going to be a counterparty. And how can you get rid of it? I mean, this is the very essence of this type of financial relationship, right? So the role of DeFi is not to get rid of all the like such centralization points. It's to get rid of those centralization points in the infrastructure layer, at least to me, in which they're really redundant. This is already possible to exchange assets in a truly permissionless peer-to-peer manner using smart contracts. This is slow, this is expensive, this is limited to some particular assets, but that works already, right? This already shows us the potential. And now what we need from the regulation is not of course, there is like this philosophical part to this issue, right? So that how to connect something that is permissionless and decentralized with regulation that deals with centralization, but I'm sure that we are gonna solve like find a solution to that in some form. And to be honest, this is already happening. We have the already concluded consultation on crypto assets in the EU, and even though they focus on those like centralized, let's say intermediaries like exchanges or custodial wallet providers, they ask a few questions about decentralized models as well. It seems that the EU Commission's approach is to, not touch it because it's really nascent and it's really too easy to destroy if you do something wrong. But it can already be seen that they are interested in, for example, opening removing the barriers, right? It is clear, for example, that in Europe, CSDR, Central Securities Depositories Regulation, is a certain barrier for creating more robust, decentralized, permissionless trading venues or trading protocols. And this is something that there is already regulatory discussion, not only among regulatory and experts and lawyers, but among regulators already. And this is happening around the globe as well, right? So point by point, we are getting to a stage in which we are gonna really be in a much better position, in which we can create perhaps not like a full bridge, but there will be connection points between centralized world of also regulation and decentralized finance in a way that products created are gonna really change our lives and our economy.
How would you reply to the following question that you do need regulation once you are connecting off-chain assets, such as the wine bottle, or take any other industrial asset, you know, like, I don't know, a machine, a chemical silo or whatever, then you do need a regulation. Does this make sense?
Yes, it obviously does, but you know you need to look at like various like other value propositions of blockchain. This is not only decentralization, this is also security and transparency. So this is really great, right? That even if you have like a product where you have a certain like centralization, because you can't really avoid it, because like basically by the very nature we can't, or there is no technology that would allow it. Still there is certain transparency, because imagine, for example, in the context of certain custodianship solutions, right? The mere fact that you know that, for example, a certain Ethereum, a certain address is storing some type of asset, you can immediately see on the blockchain layer whether these assets are there or aren't, right? Even though someone has a full backdoor to the smart contract and can move these assets, you can see whether these assets are still out there, right? Which really provides much higher degree of transparency. Of course, it is much more difficult with bottles of wine, right? Because you need an oracle that would look into this basement in which this wine is stored, and this is Fabian's point. But still, this is not about like creating a revolution, in my opinion, in which like everything will be decentralized. This is a great perspective of a much decentralized and permissionless world, but we are getting them point by point, right? First, by removing intermediaries such as various like exchanges or like other middlemen in finance, so that we decentralize from the center towards the edges, and these edges are always going to be there. But in the end, we're gonna end up with something that is much more, secure, safe, transparent, and permissionless.
Okay, perfect. Magnus, would you like to take more arguments on connecting off-chain assets? Because apparently, you as an auditing company, Ernst & Young, would of course be interested in connecting more off-chain assets because this needs to be audited to provide trust between the connection between off-chain and on-chain. Would this be right? And are more companies being interested, or is it just these two which you have mentioned?
No, we have several others who we are working with in relation to that matter. So it's not only two. We have, I would say, 20-ish projects around that, involving that in some kind of ways. So there's definitely an interest. But yes, I think you touched up on something important here as well, as from an auditing point of view as well. I think one of the most important things that we see within this landscape is all about trust. It's down to what that is all about. So the question here is, when you look into that, say the majority, 90% of all DeFi products are developed on the Ethereum platform. And they are written in code. So hence, can you trust the code? And can you also trust the team that is behind it? Because when it's written on Ethereum, you have also a possibility to actually stop parts of this and control it partially. So at the EY, we have a great focus on that. And we do a lot within the Ethereum area. Among others, we have created a smart contract testing tool. You can go to blockchain.ey.com and upload your smart contract there to test and verify whether or not it's bugs or hidden frauds within that contract. So I think that's an important element that we'll see for matter that needs to be taken into consideration. So we just cannot trust blindly the product, but we need someone to verify the code, as well as also the auditing function of actually physically verify that the physical asset is there, and also that what you have allegedly on-chain on an asset, a virtual asset, is actually backed up against what you claim it to be backed up.
Okay, perfect. That's interesting. I also think that potentially there might be more off-chain assets, but of course they are not then truly endogenous to the DeFi ecosystem. I would like to touch last point also mentioned in the chat about flash loans. Are flash loans a risk? Because apparently you could argue that there has been some nearly melt down because of the flash loans? I think Fabian is the perfect person to answer this question. He discussed this extensively with others already. But first, then please highlight very quickly what are flash loans, such that the answer can be understood widely.
Okay, so I think we have to understand traditional loans before we can go into flash loans. With a traditional loan, it either has to be collateralized, right, that you have some asset in custody as basically to secure the loan, or you need to know the person. So you need to know it's this person I'm lending money to, and then I can take legal action in case he or she does not pay me back. The interesting thing about flash loans is that there is no collateral and you do not know the person. So basically it defies all the rules of loans as we have known them so far. With a flash loan, you get a loan, you do something with it, and you pay it back all within one single transaction. So basically you get it in the transaction, you do something with it in the same transaction, then you pay it back with the same transaction. And this caused some trouble because people have been able to borrow a lot of money, basically on a really high level, manipulate oracles, manipulate the prices they are showing, they are signaling, and then profit with some derivative constructs. Now, the thing is, I don't think we have to blame flash loans for that because these attack vectors, they have been open before flash loans. They have been restricted to whales. They have been restricted to people with a lot of money. And now suddenly other people also have access to this attack vector, which may or may not be a good thing, depending on your side of the story, depending on your judgment call. But the thing is, it's not the flash loans themselves who make it insecure. It's some issues with the oracles, it's issues with the codes. And to your question, whether they are here to stay, yes, absolutely. I think it's highly innovative for the reason I've just mentioned. I think it's really interesting. And as with every single innovation, there are some drawbacks, there are some risks, there are some learnings, of course, because we have to get used to them first. But I think it's a really interesting technology.
Yeah. Anybody wants to add something on the flash loan aspect? Maybe Jacek, would you like to add something? Did you really feel that they might have caused some kind of meltdown during the downturn of the markets?
Well, I'm not sure if my knowledge about flash loans is sufficient enough to speak, elaborate much on that. But my personal perspective is that this is one of those really cool developments that whether they're practical and whether they're gonna get much traction, this is we're gonna see. But this is one of those this is one of those features of this innovation stream, right? Which is things like those flash loans pop up every few weeks. That's my perspective, at least. So that you really see those smaller perhaps applications of within DeFi that are popping up from time to time, which really show you that the innovation is out there and people are still working on some fantastic solutions. And I really think that actually flash loans is something that this is basically something that did not exist. I mean, Fabian is probably right that this is the concept is not entirely new, but the implementation here, this is exactly with a few other innovations in crypto, so that you receive something that is, in some applications at least, is extremely simple and extremely easy to use, right? And this is something that is, at least in my opinion, totally new. But that's it on flash loans from me, at least here.
Okay. And yeah, another question from my side would be, now that we are tackling the end of this panel discussion, the question would be, right now, where we are mainly running DeFi on Ethereum, I would say 90–95%, even more. Other chains, EOS and others would also like to tap into the DeFi ecosystem, somehow get a share of the cake. Do you see this happening, or do we already have set a standard, which is Ethereum, and it stays like this?
Philipp, I'm going to say something really controversial.
Okay.
When the base layer is not decentralized, then it's really hard to build DeFi applications on top of it. And that's all I'm going to say.
Yeah, so it doesn't make sense to move anywhere else at this point of time.
Well, I wouldn't say anywhere else, but you mentioned some other examples, and I'm not sure about those.
Okay. Anybody wants to add something for this question? Okay, perfect. And the last question, so far, well, we also experimented with a DeFi fund out there, and my personal experience was that ultimately you can program a smart contract doing like something like a passive investment fund, and then this would lead to the situation that you do not have any technological edge anymore. Once the code is on-chain, everybody can copy paste it. So you would have immediately competitors out there for a specific product. So at the end of the day, my feeling was that you need to have reach, marketing, and outreach to really be successful, because you cannot have an advantage just simply based on the technology. That was just a very early thought. Would anybody like to comment on this, that ultimately finance and smart contracts are open source, they can be copied, then you have competition, margins going down, and the only USP you then have to have is outreach, sales, and marketing. Does it make sense, or is this a bad thought?
Well, I think that depends on like what kind of products are we talking about, because like really this is not new in a way that open source did not, you know, emerge together with DeFi and blockchain, right? This is quite the opposite. I mean, the blockchain was possible thanks to the open source approach, right? And you know, you can already see in the traditional IT space how, you know, those like 20 years ago it was not obvious at all. Now it is obvious, and I mean, it is obvious that open source plays a hugely important role in the development of technology in general. And here, you know, I think that regarding this, you know, because from time to time I'm dealing with this as well, regarding this, you know, IP strategy, you know, licensing, keeping copyright, opening some stuff or not. You know, if you're really thinking about those products that are gonna be decentralized, permissionless, open source is a must in some form, right? And by open source, I do not mean only that the, you know, code source is open, but also that you actually has permission to use it, right? Under a free open source license. Perhaps copyleft one, right? Perhaps it makes more sense, especially in the case of smart contracts. So that's definitely the case, and that's like fully supportive. You cannot think about, you know, open decentralized protocols that everyone feels safe using without doing that. On the other hand, you can have some gateways into these protocols, right? Which also, by the way, can be regulated. This is probably the most appropriate point for regulation to come and apply. And those gateways that you know, they might be, you know, open in a way that they can share their code and show that, you know, nothing weird is happening behind the curtain. But on the other hand, that can be proprietary. You can earn money on that, right? And at the same time be regulated. So I think that it's about striking a right balance between what is, you know, open source, totally free and accessible, and this is those things that can be a little bit more closed and, you know, to like, you know, a little bit easier to monetize, for example. And once you strike this right balance, you have both, you know, products that are fully permissionless and decentralized. This is all what we are hoping for. At the same time that they are, you know, viable business-wise.